Massive update for XRP investors. Jay Claver states the 48-hour countdown starts now. And during today's episode, we're going to break down what could be on the horizon for the XRP community as the reverse carry trade is playing out before our very eyes. With silver creating brand new all-time highs and gold outperforming the S&P, we are clearly in uncharted territories for commodities and digital assets overall. Bitcoin, XRP, and several other digital assets are yet to outperform like many other commodities. And what Jay Claver is outlining is how 2026 gets kicked off with the Japan reverse carry trade playing out before our very eyes. We're also going to highlight some of the historic price action that has happened thus far, leading us to believe why the largest companies on the planet could be leveraging the XRP ledger much sooner than the general public is aware of. Hello and welcome back to another episode of Good Evening Crypto, your favorite crypto news related channel. If you enjoy this content, smash that like button and subscribe. And I want to give you a quick update as tomorrow morning, 10 a.m. Eastern, I will be joining the Paul Barron podcast following Jay Claver. So tomorrow morning, Paul Barron will be having me on his show. Looking forward to that, guys. But with that being said, let's dive right into this interview.
You and I talked about it this last time that you were on the podcast around the reverse carry trade unwinding. That has been a very soft approach by the Japanese government where they haven't accelerated, the rate hikes as much as many people anticipated. What do you make of that right now? Where do you think it is in its current life cycle of an unwind?
I think we're right on the precipice here. They're walking on a razor's edge. All the bond yields that are over there in the Bank of Japan, for the BOJ, they're at 20, 30, sometimes all times high. For the long end of the bond curve there. So, I think they're walking on a razor's edge, and I'm still sticking with my call for oil. I think that backs them into a corner if there is a spike in oil and causes inflation in their economy. They're already running hot. They're over their mandate, a little bit more inflation than we have here domestically in the U.S. And so if there's anything that exacerbates that, they'll be forced to raise interest rates aggressively to combat it.
Yeah.
And I don't think, they want to be the aggressor, and neither do the Fed, right? They need an outside catalyst or scapegoat that they can point to and say, oh, well, it wasn't our fault. We had to because of this situation.
Right.
That's my thesis. But I do think, it could happen this year. I don't think we're very far away from it.
So when you say this year, we're recording this on the 23rd of December. You're talking about 25 or 26?
25.
So next week.
Yeah, like within the next 7 days here.
Okay, so a potential there. Now, of course, when you look at that and with regulation, because that's kind of one of the things. And again, we don't even know if clarity is going to get through. So that in itself is going to be something else. Let's talk about 26.
Yep.
What does it look like to you right now? Many people are claiming Bitcoin could see another all-time high. It's like a 50-50 group right now. I've got Tom Lee on one side spouting to, $8,000 Ethereum and a $200,000 Bitcoin. I don't know if these analysts are on top of this or not. What do you think? Do you think we have a big year for Bitcoin?
I'm going to be unpopular with this call. I think we're in for volatility. What does that mean? I think you could see $190 Bitcoin. I think you could see
$190K or
$190,000 Bitcoin.
Okay, all right.
And I think you could see a $20,000 Bitcoin all in the same year.
Wow. Okay, so heavy volatility. Man, this is knowing when to exit, guys.
Yeah, when you never go broke taking profits. I do think there's going to be volatility, and so taking leverage on stuff or significant amount of borrowing against your assets. We talk about that all the time as a one pack. There's no, taxes if you borrow against your assets because it's debt. But if you get a little over leveraged and you can't meet those capital calls, now you're in a bad position and you lose that collateral.
Yeah.
We do that with tri-party agreements out of Anchorage. We provide people lines of credit against their Bitcoin, their XRP, whatever that might be. And the way that I like to do it versus a smart contract is the partners that we have will give you some time to cure those things.
To team it up. Yeah, we've seen that because I know with Morpho, they'll liquidate you quickly if you don't keep that LTV down below whatever your target zone is. But I think most people are probably hanging in that 30 to 50% LTV anyway, loan to value.
Yep.
out there. So that's a very safe, unless you do get one of those volatile spikes
Well,
down.
10-10, we saw
Yeah,
a
exactly.
huge gap in the market. There was a lot of people that got liquidated during that period. We had no assets called away. None of our clients. We had about, I think, 40 million in loans out at that time, and none of those clients' assets were called away.
Okay. Well, that's good. I mean, this is do you think?
And I do think that's one of the easiest ways that our listeners can protect themselves, guys. Avoiding the large leverage trades in this market is going to prevent you from about 99% of the catastrophes that occur inside the crypto space. And what I love about what Jake is outlining here is he's talking about strategies to succeed after price appreciation in 2026. If you're enjoying this content, smash that like button. Let us know underneath the video, what is your 2026 price prediction for XRP? But let's continue.
We'll see another event like that in 26.
Well, could be sooner. Like I said, here in 25.
Some of these market makers, what was it? Somebody told me it was after a podcast, and I was on with a Wall Street analyst. He said that there were some major market makers that went down, like they're gone from just that event. So
it pulled a lot of leverage out of the system very quickly.
Yeah.
I mentioned Tether. I think you could see Tether depeg if we do see the reverse carry trade unwind at scale.
That would be
huge. You add losses in Bitcoin, and I think gold could see 2,100.
Woo!
Yeah, I don't think it'll be there long, but I think you could see both of those things drop very quickly when the reverse carry trade unwinds.
Just so we know, I'm going to timestamp this right here, because this right here is where gold is trading right now.
Yeah.
Which is at 44.70, another all-time high.
Yep.
And then you look at silver holding in,
70.
Crushing $70 right now. We were doing videos on silver back here, guys, at about $33. So if you were watching our videos, you're welcome. It was a short run. Now, I don't know if that means we're going to $100, even though I've talked to a lot of people still think we're going to see a $100 silver and a $5,000 gold,
Yeah, I think those are reasonable numbers. So if you look at the gold to silver ratio, historically, it's about 40 to 1.
Yeah.
And silver still got a bit to run to get to that, right? At a $4,500 gold, it would need to be around a $90 silver.
If you were deploying cash right now, let's take a look at XRP. It's depressed down here at 188. Great time to DCA. Okay. This is way undervalued right now. You could look at something like XLM, also setting in very undervalued right now. We just did a deal on Uniswap. I'm watching this one very closely after that 30% hike, that we just saw. And then you've got HBAR and a handful of others that could be playing into this. There's HBAR also holding in at 11 cents now? So this is crazy. And these are utility products, guys. So
they're not today, right?
Yeah.
Like all of this is speculation today, but in the very near future here in 26, I do think you're going to see price movement on a few of these assets before the Clarity Act goes.
Yep.
And then post Clarity Act, they'll have enough liquidity in them to start being used at scale, and the banks will have, enough volume to hold price stability. I think the charts will look very different.
Right.
Well, Johnny, this is where I want to give credit to you, because you've stated that back in 1996, after the passing of the Telecom Act, we got 3 years of speculation that turned into utility for the internet. And we're about to witness the exact same thing here for digital assets with the passing of the Clarity Act. Now, 50% of this is already complete. With the Stablecoin Act, aka the Genius Act, having already been passed here inside the United States, we're now waiting on the infrastructure, which is the Clarity Act. And once the Clarity Act is passed, there is going to be a great consolidation of wealth from all these meme coin projects that maybe they had real use cases several years ago, but today are severely lacking. All of that wealth will be consolidated into the real world projects that are focused on tokenization, stable coins, smart contracts, and bringing in the TradFi players that dominate the economic system of today. Those projects create a very short list. HBAR, Cardano, Solana, XLM, even Ethereum. These are major players that are going to profit far greater than some of the other ones, because so many real world products are going to be implemented on top of these blockchain ledgers that there has to be an increase in price because of all of this new demand. Johnny, what's your reaction here?
Yeah, you're not wrong about that. The only difference is the timing. So what's going to happen, in my opinion, is before we get to what you were just describing, there's going to be a speculative phase, and everything's going to go up. Anything and everything. Just like if we have a repeat of 1996, 97, it almost didn't matter. Everything that went bust actually boomed first. So to me, you might even have shit coins and things like that with a lot of speculation money flooding into this space going everywhere. And then what'll happen is, and then that's where you need to have an exit plan, right? And Jake was right. He talked about that, right? There's going to be a speculative phase. You need to have an exit plan. You guys know how to do that. You click the link below, sign for Merlin, get yourself an exit plan. But Abs, then what happens is after all the speculative run kind of comes to an end, and I don't know if that's going to be 6 months, a year, 2 years. I don't know how long it's going to last. But when it does, then you get that consolidation phase. And this is where a lot of the coins go away. And the ones that stick around and survive will be the ones with utility like you're talking about. Those will then form the infrastructure of what our future systems, the back ends, the monetary systems, everything that gets digitized and tokenized is going to run off of. Okay. I mean, you're going to have driver's licenses and titles for your homes and everything, the stock market, everything's going to be running off this stuff. All of those things, that will then be the true driving of utility, which will be 2, 3, 4, 5, 6 years from now. And we'll see another price appreciation for all of those big players. And you heard Paul talk about it, right? He talked about HBAR, talked about Uniswap, he talked about XRP, talked about XLM. These are all utility plays. These guys get it. And these things are all ultimately, I think, in the long run, going to be the ones that survive. Actually, they're all right up there. And they're all going to make it and kind of be there for the future. But what I want our listeners to understand is there will be, in my opinion, a speculative phase where almost anything and everything is going to be going up. Not financial advice, not a financial advisor. But I think it's important people understand there could be a massive opportunity there. But don't get fooled by it. Don't think because you see your shit coin or these other coins going up in the speculative phase, thinking they're going to be there in the long run. They're probably not. They're just benefiting from the old saying, a high tide raises all boats.
And what we're waiting for here, guys, is alt season. My belief is 2026, we are going to see a liquidity wave come into the market, the likes of we've never seen before. And I think XRP has positioned itself to capitalize better than any other project in the space when it comes to that brand new liquidity wave. Now, one thing that I take away from the interview with Matt Hogan that we had about a week ago, Johnny, was he said there is going to be a rotation of capital from Bitcoin, Ethereum, and some of these outdated blockchain products into the new revolutionary guard, which is the HBARs, the XRPs, and even the Solanas, because of the tokenization of real world assets and how strong these communities are. Those are the projects that are set to succeed. Now, Jake also outlined the reverse carry trade. We're going to break that down towards the back end of the video, guys. If you're enjoying this content, smash that like button. I want to remind everybody, tomorrow, 10 a.m. Eastern, I am going to be joining Paul Barron on the Paul Barron podcast. Then I'm going to be jumping on here for another live stream. But with that being said, guys, let's dive right back into this interview.
S&P 500, as we're recording, about to hit 6,900.
Yeah, that one.
Would you have ever called that? You know, Tom Lee called 7,000 by end of year.
There's, I can't think of David's last name. He's a well-known analyst. He's on Twitter. He's been on multiple podcasts. I watch him.
Mm-hmm.
He called 7,000 S&P.
Yep.
And this was like in 2020.
Oh,
like a long time ago. And he said that would be pretty much the peak. And then we would see, you know, a big red candle.
yeah.
And I don't think he's wrong. I think, again, you know, we're right on the precipice of the reverse carry trade happening here.
I mean,
you can see how aggressive this climb's been.
The only era that we saw that kind of move was right here in 2008. And if you, I'll zoom in on this for everybody. I'll just go right there. This is on the monthly chart. But if you look at just where we were right there, 07 October, I remember when that date hit and we saw the S&P unwinding 53% right there in a matter of what, March 09? Ooh, I'd say what, 17 months? So
again, this is what Jake's been calling for with the reverse carry trade, is that we're going to see a rapid depreciation across all asset classes. He's calling for gold to go to 2,100. He thinks silver is going to go back down to 35. So all of this is really set to play out, Johnny. Doesn't appear as if Paul is buying too much into this narrative, but Johnny, If we do see the major correction, I think Jake is going to look brilliant. It'll give our listeners a chance to buy these lows, take advantage of the reverse carry trade, and eventually experience those exponential gains that we've been talking about, which will be sitting on the back end when this is all said and done. What are some of your thoughts?
Yeah, I mean, first of all, when you look at the chart that Paul put up there when he zooms on 2008, let me remind everybody that was a massive, massive black swan event where we had the credit crisis. For those who maybe weren't around then or were too young, abs, or in diapers, that period of time when everything imploded and Lehman Brothers and Merlin all went under, that literally took us down into that spiral. So the question that you got to ask yourself is, okay, if you're hearing all these experts saying 7,000 is a peak and then we're going to get something to pull it down, it almost lines up with, are we going to get some kind of weird black swan event? Just the way we got that in 2008. Nobody expected that. Nobody knew it was going to happen other than the big short guy, Michael, I forgot his name. He kind of called it, but everybody else, nobody saw it coming. So the question is, what's coming this year now that we're at all-time highs? That's typically when you do tend to see them crashing the markets. So will something happen? I'm not going to sit here and rule and then not rule out and say it can't. We don't know. That's why it's a black swan event. And if it does, what will be the solution? Could XRP come into play and be a liquidity crisis cushion, as Jake has been talking about? Very possible. Who knows?
And what we're actually looking at here, Johnny, is a complete reversal from the Federal Reserve when it comes to tightening their balance sheet. And we've been waiting for this since Joe Biden was elected all the way back in 2020. The market has experienced nothing but pain since the quantitative tightening began in 2022. And 2026 is setting up to be an incredible year. Trump is calling for interest rates to go 1% and promising stimulus checks as well as AI CapEx nearing $1 trillion per year. Precious metals making history with some of their gains. All a mass deregulation is in full swing for China and the United States in an all-out AI arms race. Meanwhile, midterm elections are coming. The Fed has ended quantitative tightening, and retail participation in capital markets is at record highs. Crypto should be rejoining the asset ownership party very soon. Be excited for what's next and position accordingly. And that's where I can agree with what Jay Claver is saying. 2026, whether we hit some of these price targets that we're predicting or not, Johnny Krypto, one thing is clear about 2026. It is going to give listeners an opportunity to get exposure to the right assets, whether it's stocks, bonds, gold, silver. Midterm elections are around the corner. And my belief is with the suppression of digital assets here in 2025, these are the projects that are set to outperform heading into this election cycle. I'm very positive about that.
And, just to build on that, it was funny when Paul was actually showing all the charts. I don't know if you guys go back and you watch the video later. Go watch him. Every single one he showed, XRP, XLMH, you could see they were all triple bottoming apps. They were all literally hitting massive support levels 3 times. When you double and triple bottom, that usually, well, that's what they call a double, triple bottom, is a very, very strong support level, meaning that's when smart money is getting in. And unfortunately, as we all know, retail money, usually scared money, doesn't come in. But that is why we want our listeners to be aware that right now, apps, while it feels like crypto is dead and crypto's over, the reality is smart money is buying right now because they know what's coming next. It's already almost written that we're going up. The question is, are people going to be willing to buy like smart money is right now, buy these all-time lows?
Well, if you guys are enjoying this content, smash that like button, subscribe to the channel, and let us know underneath the video what are some of your thoughts. We're going to wrap it up with this brand new clip right here.
They're going to need to move to real-time settlement on the back end of the stock market to de-risk from the Bitcoin ETFs.
Yeah.
There's absolutely systemic risk at this point, and Bitcoin trades not quite real-time, but pretty close. And the stock market, the market makers settle T+1.
Yeah.
So they're going to need to move to real-time settlement. We listened to, Monica Long interview the president of NASDAQ at Swell this year.
Yeah.
And she actually spoke about, distributed ledger technology being implemented on the back end of the stock market for reconciliation and settlement between the clearinghouses and brokers.
Right.
And so I do think that that's going to be the first application that we see for this type of technology. And I think XRP is going to sit squarely in that position, but they're going to have to drive enough liquidity into it. And the only way that they're going to get that there is if, BlackRock rolls their ETFs and we do get this supply shock.
This is
where-
the one that worries me most right here is MicroStrategy.
So let me just comment on this, Johnny, because I do think what Jake is saying is extremely valid. The fact that BlackRock hasn't been transparent about what their plans are for XRP lets us know that something much bigger is happening in the background. And oftentimes when I listen to Jake Claver talk, I feel as if he knows things that he's not allowed to say. But what I think is so valid about this narrative, Johnny, is that at the end of the day, BlackRock is putting themselves in a position to be a leader in the digital asset space. And with what Ripple is doing through these acquisitions of real world companies and working hand in hand with the United States government to develop the Clarity Act, they are putting themselves in a position to profit off the growth and development of digital assets inside the United States. If BlackRock is looking at this market objectively, you find yourself in Bitcoin, you look at Ethereum with the smart contracts, and then you end up in Ripple here with the dominance of TradFi bringing traditional companies into the blockchain space. That is where there's more money to be made than any other portion of this market. People love to emphasize the narrative that Bitcoin can be a digital gold, but if XRP and Ripple, the company, are responsible for bringing banks into blockchain products, the amount of liquidity, the amount of money that will be generated from that transition will be off the charts historic. And I think it's how we get to some of these extremely high price targets, well north of that triple digit entry price. But I'd love to hear, guys, do you believe XRP can be 3 digits by the end of the Trump administration? One's for yes, two's for no. Johnny Krypto, what's your reaction here?
Well, Abs, it's one of those things where when you think about liquidity that you talked about coming into this space and the tokenization of everything, that's what Larry Fink and BlackRock keeps talking about, is that the whole world is getting, everybody's talking, JP Morgan's talking about now, they're all talking about tokenization. And well, what sits at the center of that? We know XRP is looking to be a piece of, there will be multiple layers in terms of tokenization happening. But with that happening, it's hard to not anticipate that XRP isn't going to have a piece of that. And then that's what, to me, has me excited, because the valuations of the tokenization will help drive what the value of some of these tokens need to be. And so that's where it gets exciting, and how you get to some of these, what they call repricing of the blockchain. So we'll have to see how the whole thing plays out. But we know that BlackRock they are riding that narrative of tokenization. What I'm surprised about is, like you said, they're so quiet and mum on XRP. And it's one of two reasons. It's either A, they want nothing to do with it, or B, they're all over it and they don't want anybody else to be part of it. And that's ultimately what I think we're going to find out in the long run. But it's so hard when you just see how entangled Ripple has been with the whole world, that how it's just hard to not anticipate XRP not being part of that tokenization process.
And one thing that we know for sure, Johnny, is that gold and silver are outperforming here in 2025. Silver is now up 175% this calendar year. And what's really interesting about this is that if it can be done with gold and silver, it can definitely be done in smaller assets like Bitcoin and XRP. And if you look at the silver price chart in correlation with Bitcoin, this major move could be on the horizon. Now, if we got a similar move, a similar percentage gain, we would be looking at about a $400,000 Bitcoin. I absolutely do not think we get there. Instead, I think if Bitcoin can get a second rally north of $140,000, that is more than enough liquidity to send these altcoins to the moon in 2026. If you're enjoying this content, smash that like button, subscribe to the channel. We're going to play this last update from Jake Claver's 2026 predictions. Here it is.
This positioning right now at 159, even though some people say, and I know he's went back in, Michael Saylor going back in on Bitcoin again, as it hovers another down off the 90K down into 88 as of yesterday. So I get a little bit spooked by this one right here, because this has a lot to do with how these digital asset treasuries could unwind, especially on the Bitcoin side.
I think they will, right? And that's what's going to be the additional pressure here. So we've seen the benefit of these financial products, right?
Yeah.
We saw the ETFs for Bitcoin. We saw the DATs for Bitcoin. And, it pushed it to an all-time high before the halving, which is outside the norm of these market cycles. That's never happened before 2024.
Crazy.
So, I think that the downward move is also going to be exacerbated, right? And that's why I say volatility, and we could see a $20,000 Bitcoin if you had the unwind at scale and the destabilization of Tether, and people. We also haven't seen the rotation for the alt season at this point either.
Yep.
You tend to get a retrace for Bitcoin where it comes back up after it's hit all-time high. I don't know if we have or not for this cycle, because we're in uncharted territory. Like I said,
this is definitely going to be a year to be doing smart investing. It's not going to be a hodl year for some of these assets. You really need to be watching every macro trend, every little nuance in these global positioning, as well as precious and stocks, I think, that are going to play into this, especially on the AI trade. And then the debasement side against the situation that we're dealing with on inflation.
If you have stabilized money, and I talked about this in a video I put up the other day, the asymmetric bets and the pace at which people will become wealthy, I think, is going to be significantly elongated. I don't think you're going to have people that are able to, outside of startups and early stage investors.
That's the thing I talk about is that I think the altcoin opportunity is probably over. Unfortunately, the ICO phase, I mean, there will be a handful of crazy wins, but the rarity will be so narrow. It's going to be in these tier one and blue chip assets that move 20, 30, 40% a year, or if you get a flyer or something like what we're seeing with precious metals, right now.
Yeah, I think over the long term, markets will have a regression to the mean, and they'll have, they'll follow GDP.
Mm-hmm.
We've got a lot of emotions in the market now, and you also have a lot of manipulation with derivatives and paper.
No doubt.
So, once they move the COMEX over to, they do 589 on the COMEX, and you have to back it and audit it, and they can't issue additional paper. There's just going to be a lot of things when this stuff moves on chain that will keep the volatility out, and the volatility is how people make money.
Yeah, for sure. Yeah.
Well, Johnny Krypto, you just heard it. 2026, the game changes forever. And that's why I always encourage our listeners, take a long-term approach to this market, get as much exposure as you can, and don't be scared out of this asset class because a little bit of volatility as these assets grow. And we're looking at an 8, 10, 12, 15, $100 XRP. It is going to become very difficult to accumulate a meaningful bag. Luckily, we are all here before that moment. If you believe we get an alt season in 2026, smash that like button. If you disagree, leave a comment underneath the video, and we'll see you all in the next one. So if you're looking to do the same strategies that we implement here on Good Evening Crypto, I would advise everybody sign up for Merlin and click on the ITrust Capital link below. Now, why did these two ideas play off one another? Merlin is going to allow our listeners to understand where they should be taking profit in this market, and ITrust is going to allow our listeners to take that profit tax-free through an IRA product. Now, that's not the best part about this. We are giving new clients a $100 sign-up bonus using the promo code GEC9. So I would encourage everybody, click on the link below the video, use promo code GEC9, and set yourself up for success during this crypto bull market.